Welcome to the Wealth Setting Podcast Video Edition. I'm your host, John Pugliano. I'm also the founder and money manager at investablewealth.com. In today's episode, I want to talk about a timely event, and that's what's going on at Starbucks. Starbucks announced today that they're losing market share to some of their competitors. Now, naturally, the stock market acted unfavorably to that news, and the stock was down, about close to 1% today. It hasn't been doing well for the better part of this year. Full disclosure, I do own Starbucks in my portfolio, and so the question I'd like to answer in today's video is, should I be concerned and should I sell the stock? Now, as I've mentioned before, I look at least three methods when I determine whether or not I'm going to buy or sell a stock. The three type of analysis that I primarily rely on are fundamentals. That's when I assess the overall value of the stock, how it's performing from a financial standpoint. The other is trends, which happen to be maybe social or political, perhaps demographics. And finally, the last one is technical analysis. That's when I look at chart patterns. That's what I've been talking about in these series of videos, and that's also what I'm going to talk about today. So let's pull up a chart of Starbucks and see if there's any information there we can glean. As I've done in the past, I'm going to use Yahoo Finance so you can follow along at home. So we're in Yahoo Finance. I'm at SBUX, which is the ticker symbol for Starbucks. Let's click on the interactive chart. And you can see here's a chart of Starbucks over the last 3 months or so. It's been relatively choppy, and we know that by bringing up the 50-day moving average. Let's just bring that up. Let's emphasize it. So there you go. You can see that at the end of the year, the price on Starbucks had dropped below its 50-day moving average. That only lasted for a day or so, and it came right back up. And then that happened again right at the end of February. Once again, this is fairly erratic behavior for a blue chip, fairly stable stock like Starbucks. It took about a month, and the price recovered, and since then you can see it's been hovering right around the 50-day moving average. Now, I like to look at the 50-day moving average as support, and so when I see something like this happening, I do get concerned, but that's not the only thing we looked at from a technical standpoint. So now let's bring up the 200-day moving average. That's going to give us more of a long-term view. And that's our purple line right here. Again, you can see that, let me bring up the 50. You can see that the 50-day and the 200-day are pretty close to converging there. The 200-day, this purple line, has been very stable, as you would expect it to be. The 50-day had been advancing, and now it's flattened out and maybe declining. So the question is, should we be worried about Starbucks? Well, from a long-term perspective, let's focus in on this 200-day moving average. And again, you can see at the end of the year, it breached that, but it quickly recovered. Then in the end of January, we had similar problems, just like it did with the 50-day. And right now, it appears like maybe losing support on the 200-day moving average. Well, we don't have enough information at this point to know if the price is going to continue to drop like a rock or if it's going to recover. And so I can't predict the future. I don't have a crystal ball, but I do have charts, and my technical analysis is going to have me focus on this 200-day moving average. I'm going to watch this area right here. I'm going to see how long it takes for the price to either recover from that 200-day line, in which case I won't be worried, or I'm going to see if it drops like a rock. Now, we know the personality of the stock by bringing up, let's look at a 2-year chart. You can see that Starbucks holds pretty closely to that 200-day moving average. Whenever it's in an uptrend, the 200-day moving average moves up nicely. Then the stock always tends to consolidate and maybe pull back a little bit before it advances onto the next high. The question always is it going to advance onto a high from here, or is the stock going to fall down and become a lackluster performer? Well, we don't know, but I am watching that 200-day moving average closely, and again, you can see how well that generally acts as support, and when it does fall below, when it does breach below that 200-day moving average, it generally does recover. So for now, I do plan on holding on to my Starbucks. I like it for other reasons, particularly from a profitability, a fundamental valuation standpoint, and also overall excellent management there, and the general trends that we see of the acceptance of Starbucks, not only in the US, but also globally. So I'm not going to sweat it at this point. I will watch it closely. I'll come back and give you additional updates. If I do sell the stock, I always post that at my blog site over at investablewealth.com. If you'd like to hear me discuss more of my thoughts on Starbucks and why I do plan on holding it, well, I have posted a new episode over at the Wealthsteading Podcast, so you can check that out at wealthsteading.com or at iTunes or wherever you get your podcasts from. Well, hey, as always, thanks for joining me. Until the next episode, this is John Pugliano wishing you the very best returns.